Hello and welcome. Today we will cover the ABCD heretic patterns and you will learn how to trade it, and we will also showcase how to find the best signals to trade market reversals. So if you could subscribe to the channel and stick around for the full video. ABCD is histographs chart patterns that contains two impulsive waves of the equal lengths and considers the reversal formations. In fact, it's the most popular and the simplest histographs patterns of the forecast reversal in the market. I know that his harmonic patterns seem complicated and difficult to trade, so I will keep it as simple as possible. The length of the two waves of the ABCD patterns is based on the Fibonacci ratio. Basically, there are three waves in the ABCD patterns, two impulsive waves and one retracement waves. ABCD harmonic patterns can show into two different types, bullish and bearish. The price actions behavior of the ABCD patterns starts with the price moving in the new direction point, which later certain and important swings levels point B. Then retracements and the point of the leg at the point C, and finally resume to take out the important swings created at the point B and constitute until it reaches the distance equates to the point D. And when the CD legs reach an equal distance to the B and the leg B, we expect a reversal of the CD price moves. At the same time, BC and the CD legs should respond to specific Fibonacci levels, and BC legs and the 61.8 retracements of the B leg. And CD legs is the 1 to 7.2 expression of the BC leg. When the ABCD patterns is confirmed, it will move the trade to reversal after the CD legs. So to keep it simple, after the dividing these patterns into the three components, you will be able to correctly identify and take the ABCD patterns. Remember that AB is impulsive wave, BC must be retracement waves, and CD is an impulsive waves. First step is to find the ABCD points on the chart, and that is by the looking when the swing moves on the chart. You find the swings points by the looking where the market is making the larger move, then reverse backs the market and use swings and then reverse. This is the four step setups which will make the ABCD patterns on the chart. Now these swings can be make any time frames on the market, so you need to train your eyes to easily spot the ABCD patterns, and or you can use the harmonic indicators or the scanner to detect the patterns. As the first setup, use the first swings which will make the big leg. When you have the first leg, then you need to wait until the market reverses back from the point towards points. If the market reverses back 61.8 retracements from the B point to a point when you move to the BC legs from this point, you wait to the market to make another move in the directions of the AV legs. If the price goes beyond point B, then you need to predict Fibonacci ratio of 1 to 7.2 expansions of the B leg. When the market reaches the extensions, you need to wait for the reversal signals to appear near the point. The signals can be some sort of the price actions signals, like the candlesticks patterns and engulfing bar or the pin bar or the trend line breakout, or maybe divergence and momentum indicators, or the confluence with the support or resistance levels, and that point support and resistance levels increase. The potential market reversals, which ABCD histographs patterns is used for. This is the best confirmation setups involving in these patterns. Bullish ABCD harmonic patterns appears on the market when the price is moving down, and then you expect the market to reverse. ABCD patterns will show you when the market will reverse by making the D point on the chart, and the D point will be below the other 3 points of the ABCD patterns. Then the points of the third points when the points end of the first damage then you have to do the C point, which is the retracement of the AB lag by the 61.8 Fibonacci ratio. This means that the price returns from the B point to the 8.611.61 of the big lag ABC lag. Then the price continues the same directions as the B lag, which down to reach the D lags, which is below B point, and the CD lags is the same length of the AV lag, but the down must come an extension of 1 to 71 point B lags. BC wave on the price comes to the D point, and you can expect the price to reverse and change directions. So you need to enter two buy positions. So to keep it simple, it's easier to find the right down the range rules to identify the bullish patterns of the price chart. B wave and starts from the top of the bottom. BC must retrace downwards to 61.8 Fibonacci levels, and of AB wave endpoint D must from 1 to 7.2 Fibonacci extensions levels or the BC wave. Bearish ABCD harmonic patterns appears on the market when the price is moving up, and then you expect it to make reverse against ABCD patterns. We will show you when the market will reverse by making the D point on the chart. The D point will be above the other 3 points on the ABCD patterns. The point is the starter pointing at then the B point, the end of the first upswing. Then you have to C point, which is the retrace of the AV weight by 61.8 Fibonacci ratio. Then the price continues the same directions as the AV legs and reach the point which is above B point. The CD legs is the same length as the D legs, but the D point must come on the extension of the 1 to 7.2 of the BC legs. When the price comes to the D point, you can expect the price to move down, so you need to enter into the sell positions. Again, write down the main rules of the find the bearish patterns. The AB wave starts from the bottom of the top, and the initial wave, the BC wave, must retrace upwards to 61.8 Fibonacci levels of AB wave, and point T must from 1 to 7.2 Fibonacci extensions level for BC wave. The ABCD harmonical patterns has its own set of rules for trading to enter market on the ABCD chart patterns. I would like first need to get confirmations for the patterns validity. This means you need to find the parallel price swings which are equal to the size that you look for the Fibonacci retracements. If BC wave represents 71.8 retracement levels of AB, and CT wave is one to 7.2 extension of the BC wave. Meanwhile, AB wave should also equal the CD wave in terms of the time. If you are able to identify these characteristics on the price chart, then you are probably looking to the valid ABCD patterns. After the confirmation the patterns, you should enter the market the movement when the price action points from 1 to 70 point extensions of the BC move. You initiate at rate in the directions of the bonuses, which is counter to the CD lags when you open position based on the ABCD patterns. You also need to stop losing case of extended price moves against you traded. Proper location of your stop loss would be just beyond the price extends from the end of the CD moves. The minimum target which you should purchase is the price move which is equal to the CD legs in size. In this manager, the place where CD moves starts emerging is your target, basically the 100 Fibonacci retracements of the CD wave. This is the minimum potential of the formations. The price could extend its move future and might be to your advantage if you keep porting of the trade open the chart bigger move. Therefore, after the price commutes the minimum target, you could close 50% of the positions size and keep 50 opened to try right the constitute movement. And when doing so, it's important to keep an eye out of the price actions quoted using support and resistance levels that lines, price channels or candlesticks formations. When ABCD patterns forms at the key levels or support resistance breakout levels, it would be often act as a fake or as a false breakout. I will talk in the previous video about the smart money and the liquidations of the large number of the stop orders at once before the moves back in the opposite direction. So this is the common market function in which big players known as the smart money are searching for the cool stance of stop orders to be able to detect sizable high volume positions. This is why the ABCD patterns is so powerful. It has the high probability of the winning in the case of the fake out. If you are able to understand how the smart money thinks, then even as the retail traders, you will be able to take advantage of the situations at the city level. Smart money can stop hunt the liquidity sitting just beyond the support and resistance levels, taking advantage of retail traders who don't know how to set up their stop losses properly. If you correctly identified the patterns, you will be able to identify positions on the chart where you expect closest of stop loss orders to sitting and to come up with the stop hunting strategy to advantage. Also, candlesticks formations are great confluence signals to trade these patterns. The main drawback is that you don't know when the market will reverse, and sometimes all the conditions will met are criteria, but the point D will extend future from 1 to 7.2 to 171.8, so the filter out the best signals for the reversal candlesticks patterns, mostly beam bars and inclusion bars. Here I found the ABCD patterns. See that the AB waves is approximately equal to the CD wave. Also, AB takes approximately the same time to develop as the CD wave. BC is the 61.8 Fibonacci retracements of the AB move, and the CD wave is the one of the 7.2 extensions of the BC wave. Therefore, this difference is valid because the AB and the CD wings point are downwards. We expect this valid ABCD patterns to lead the bullish price moves. Also look at false breakout, where most likely a lot of the retail traders have the stop loss orders. So once you have noticed this, it's time to exclude a long trade. You place your stop loss order below the lowest point of the CD swing, and after some time the price reached the minimum target of the patterns. Here are the level of the points C at the area. You have two variable options to entire close the trade in the full and look for the other traders or to close portions of the trade and keep a part open in order to catch the future price moves. This is particular case if you had decided to stay in the trade or the future profits. Your decisions would be reward. Observe that on the way up the price creates only higher losses and doesn't test any critical support areas. From my experience, the best course of actions is to hold the trade future until the price breaks the important support levels. If you found value and want something new, let's like to show your support, subscribe to our channel to not miss a new video. Until next time.